All right. Hey, friends. It's Celine Williams, real estate broker in Washington State, ready to help you buy, sell, and invest in real estate.
Love Finance Friday, baby. Woohoo! Hey, I'm Jeff
Yes,
Milberger with NFM Lending. Been in 30 years in the mortgage business and love helping people buy homes to create the wealth. And it's just an amazing opportunity out there right now. So excited to talk about financing and some new options that we were talking about earlier, which are really cool.
absolutely. So today we want to focus on first-time home buyers, but we also want to focus on investment buyers too, and maybe even using some of your equity from the home that you already live in to purchase something, whether it's in state or out of state. So, Jeff, let's talk about what are some options that people have for investing or alternative lending options.
You know what? There is a lot of alternative lending options out there, starting to come out of the woodwork. And it's a lot around investors buying homes and, trying to help them buy more and more homes. And it's actually a super hot product that we're seeing a lot of interest in right now. It's called Debt Service Coverage Ratio, or DSCR. And basically, the reason that it's so popular is it has very little qualification requirements. I mean, it does require quite a bit down, 20% down. So it's not one of those crazy, back in 2008, crazy loans where you can't qualify and you got no equity. Like you have to have 20% equity. So the risk is really low to the lender from that standpoint. But for the investor, it allows them to qualify for the new loan to purchase in a new investment property. And the only major qualification is the rents from the new property need to cover the new mortgage payment. That's it. Like there's no income documentation. We do document assets, obviously, with regards to how much they have for the down payment, and there's typically some reserves that is required as well. Reserves is just money left over after closing that's in a bank, so that it makes it a little more solid for the investors. But here's the key, though, is you can go out and buy any house you want. You got the 20% down, and it doesn't matter how many homes you own. Doesn't matter how much income you make. It really just comes down to, do the rents from the property cover the mortgage payment? Now, if they don't, you can go negative on that as well. Like you can go down to 70% of the mortgage payment being covered. That might require more down payment, maybe 25% down, and it also affects the rate a little bit. But I can't believe how much activity is out there right now using the DSCR. And the big one the way we're using it in another way too, with a lot of investors right now, is they're using a DSCR loan to do a cash out refinance, pull equity out of the rentals they already have, and then using that equity to buy another rental property. And so it's been a crazy situation because it's a lot cheaper than hard money. So a lot of investors will buy a house, and need hard money to buy it because they don't qualify for conventional guidelines, or they don't qualify on income purposes and things like that. Well, hard money charges a bunch of points up front, and it's got a pretty high rate, and it's also got an exit clause where you got to get the heck out quickly. And sometimes they even have prepayment penalties. So this is a great alternative that's a lot less expensive. It's less down. Like hard money a lot of times is requiring like 35% down versus the 20% down with the DSCR program. I've seen people pull cash out to remodel some of the rental properties, get the value up, and then do cash outs on those and pull the money out and then go buy out multiple properties. Several multifamily properties have been used to purchase using this program. Multifamily, in a lot of cases, will be a little easier to qualify in some cases just because the cash flow is greater on those. So if you're an investor, I guess what I'm saying is there's a lot of great financing options that are better than hard money. And in some cases, if you get turned down by your lender saying that you don't qualify for another investment property, this DSCR program might be an awesome opportunity for you to expand that base right now. And for whatever reason, I don't know what it is, Celine, but the investors are coming out of the woodwork again. And typically what that means, in my opinion, and doing this 30 years, is that when investors start coming out, the market's starting to push in the right direction. You know what I'm saying? Like the investors are always out right before the wave. So I
Right.
feel like we're getting this, I mean, we're seeing a lot of buyers out here too, I mean, out of the blue. But when you start to see investors jumping into markets, then you know that the market must starting to be a little lucrative and starting on uptick, where investors are jumping in and trying to take advantage of it as well.
No, I think that's spot on. I completely agree with all of that. And what if I wanted to, if I was an investor, if I wanted to take money out of the home that I have here and put it somewhere else, right? Because we know that the Seattle market, whatever in Washington State, it's a little expensive up here, right? So what if I wanted to take it to Florida, Tennessee, Vermont, Arizona, kind of where on average the home sale prices are a little bit lower? Is that possible to do with that loan?
Yeah, I mean, that's a lot of what we're seeing is a lot of investors, whether it's here or they have investments elsewhere, but there's a lot of different states right now that still have some really inexpensive real estate opportunities where you can buy, houses in the hundreds of thousands and even under 100,000 if you really want to. And the rents are actually still standardized for the higher rents that we see in a lot of other areas. I mean, we just had a fourplex that we bought in Illinois, not we bought, but a client of mine bought in Illinois. And the rents on it were going to be like $6,500 a month on it. And the payment on it was going to be like $2,800. I mean, it was a $300,000 fourplex.
So I need
Like
to buy a house
it
in
was
Illinois
like
is what I
cash
hear.
flow king. But
Wow.
what we did equity out of two of their rentals using DSCR, pulled that cash out, bought the property, and then they remodeled the property. Like they put new appliances, cleaned the paint, put new flooring in, got them all dialed in, and then got them all leased. And we're able to bump up the rents on all four units in that fourplex and just turned it into a cash cow. And investment properties, you know, some investors might have some lower rates on their loans right now, because of the 2020, 2021. So they're, hesitant to pull more money out. But if you're not pulling more money out, you're not expanding your breadth rental power. And it's all about leverage. And if you can pull out 100 grand, even though you're pushing your rate up, as long as you're keeping your cash flow going and buying other units that are going to cash flow as well, I feel like that's a really powerful move to build that equity position. And then as rates drop, you can always look at refinancing into different types of loans as you qualify or things like that. But even if you don't, as long as you got the cash flow, which the DSCR really wants cash flow, like it wants the rents to cover the payment. It doesn't matter. As long as someone else is making the mortgage payment, who cares? The values are going to go up over time. You're grinding down that mortgage balance by the renter paying your payment, and you're just building equity over time. So it depends on your strategies, but it's seemingly like this is one of the most popular programs. I just had no idea it was going to be this popular, where there's just so many people out there. But yeah, we're seeing a lot of people buying in Ohio. We're seeing a lot of people buying in Illinois, Tennessee, Georgia, places that are lower price points, but the rents are still actually pretty decent so that they cash flow really easily. And those are opportunities that you don't want to miss out on.
That's amazing. Can I pull the money out of my primary home, like the home I'm actually living in, or does it have to be a rental?
DSCR is specifically for rental properties.
Okay.
It's designed that way. The disclosure laws are a lot different. They're not the same as a conventional loan disclosure laws, so they're much more limited. It's very similar to like a hard money loan, where they're not as regulated from that standpoint. Again, it's truly meant to be an investment type vehicle to help investors grow their investment empire. So you can't pull it out of your primary, but if we're looking at a primary residence, maybe a home equity line of credit might be an option to pull cash out that way. Refinancing cash out, the rates go up, so you got to look at that possibility. But again, if you buy a house using the cash out from your primary, and you can generate some cash flow on a new house that you're buying as a rental property, or Airbnbs are huge right now. We're seeing a ton of cash flow on those. I mean, that's another alternative where you can generate even more cash flow than just a 12-month rental type of situation.
I love that. What about if I'm a first time home buyer, but I also want to be an investor right away? What are my options there?
I mean, I get that question a lot. I feel like you want to get your feet wet and buy your own property first. There's so many great financing options for someone buying their first time home. What I would probably lean towards is maybe looking at a duplex or triplex or fourplex as a first time home buyer. I mean, I wish I would have done that, honestly, back 35 years ago when I bought my first house. Because you can buy let's say we buy a fourplex and we go conventional, you only need 5% down, and then you can rent out the other 3 units, and you can actually get pre-approved and qualify for the new loan using the rents from those other 3 units. I mean, that's a really powerful tool. Now you move into this place, You get 3 other renters in there. A lot of fourplexes are already rented out. So you're walking into a place that's already got money coming in, and it allows you to buy this piece of investment. You live there for a year, which is the standard, you know, you have to live there primary residence for a year, and then you move out. Maybe you have enough equity to pull out, but even if you don't, go buy another property and go zero down. You might be able to get access to some down payment assistance to buy the next house, and or put very minimal down using like an FHA loan with 3.5% down. And bringing up FHA, if you're buying a duplex, FHA is only 3.5% down on a duplex, and you still get to use the rents coming in from the other unit to help qualify. So FHA is a great duplex opportunity, and then conventional just added on just like a year ago or so. I can't remember how bad it was recent that they started to allow for only 5% down to buy a duplex, fourplex, or a threeplex, fourplex. So huge opportunities to start your rental empire. So that's where I would go. And I think we just got to strategize in the best way. There is some down payment assistance available on down payment for duplexes as well. So there might be an opportunity to buy a place with zero down, get rents from other units, and then make your payment, you know, potentially lower than what you were expecting, just because other people are helping contribute towards the overall payment.
I love that. What about VA? Can you use a VA loan in order to get a
Yes, I mean
duplex, triplex,
that's the most
multiplex?
spectacular opportunity because VA is zero
VA,
down.
please do it.
No
Veterans,
kidding. Yeah, I mean
military,
VA
use
is
that
zero down up
advantage.
to a fourplex, and you can still
Zero
use the
down.
nets to qualify. Zero down. So it's a pretty amazing
That's
opportunity. You
amazing.
get a great rate, you get zero down, you get no mortgage insurance, and you can buy a fourplex and rent out the other 3 units. Again, live there for a year and then move out and buy another one. You know, there's just these huge opportunities right now. And again, I mean, kicking myself 35 years ago that I didn't do the same dang thing, but no one brought that up to me. And, you know, when I was getting counseled, which probably pushed me into this career in the same time, is like, why didn't somebody tell me this? They need, you know, someone should be educated enough to share this information with them. And so now I'm doing that with my clients and letting them know
Yeah.
about all these other opportunities that might exist that may or may not. I mean, some people don't want to be a landlord, but it's a
Right.
great way for someone that's a first-time buyer but wants to start rent, you know, get in investment properties. Just get a 4-unit place, live in one of the units. You're going to need a place to live, and rent out the other 3.
What about like to your military buddies? If you're in the military, like they don't want to be in the barracks anymore, like just buy
I
the
mean,
house, or you guys can all go
can you
in on
imagine?
it
Like, yeah,
too.
you're in the
Like,
military, buy a fourplex, and then rent the other
yes,
3 units out to your other military guys in your
no brainer in my opinion. Gosh, I wish I thought of this. Instead, my husband was in the military too.
yeah.
He bought a brand new car that he doesn't even own anymore. Can you imagine how much wealth? Like he probably spent $30,000 on that brand new Honda SI coupe. It was so spectacular. He totally wowed me with it. But like he could have been wealthy if he had just put that $30,000 in a fourplex, right? So it's like,
Yeah.
okay, that's okay. Can't go backwards, but we can do it right now. So if you are in that position, talk to us. Let's figure out what your options are because there are so many cool things that you can be doing to build wealth. And homes have just appreciated time and time, even in a downturn, right? 2008 affected for 2-3 years, even just the last couple of years. I think I just recently read an article saying that last year was the worst housing market in the last 30 years. And it's just because interest rates have come up. Buyers are a little bit picky about the homes, and not even picky. It's just like, oh, they're not willing to pay for trash.
Yeah.
Like it has to be fixed up. If it's not move-in ready, if it has an old roof, it has tons of plumbing issues, appliance issues, they're not gonna go for it anymore. That's why if you are selling your home, I feel like selling it as is or not prepping, doing anything at all, it's really going to hurt you when you put your home on the market. And overpricing is really going to hurt you. And what I've noticed, at least in this area, I'm in Snohomish, King, and Skagit, your home is overpriced. People won't even come. Like they won't even come to see if they can talk you down. They just wait. And so we can have a listing on the market with nobody coming. So pricing your home is crucial right now. And what I do is I actually talk to you, my lender partner, right? And I say, hey, let's look at how much money this is going to cost the buyer. Let's look at VA, FHA, conventional. What is the mortgage payment going to be? Right. And sometimes I actually show it to the seller and I say, would you pay $5,000 a month for this home? Because right now you're paying $1,500. So put yourself in the eyes of the buyer. And of course, I want to benefit you, but if nobody comes, I can't help you. Right. If we have no buyers, I can't help you. Right. I'm helping you market your property as best as possible, get offers, and get that money so you can take it for your next home, whether it's your dream home, forever home, investment home, retirement, whatever. So chat with us, make sure your homes are in good shape before you put them on the market, because as is properties, they're just not getting scooped up the way they used to.
Yep, that's what I've been seeing too. If the house is in great shape, it's probably moving and getting multiple offers. If the house is dilapidated at all, it's like people are sitting there for 19, 30, 45, 60, 120 days and just not moving, even with price drops. People just can't afford the payments and then also afford having to improve things. So definitely makes sense to get the house fixed up. Now, if you don't have the money to fix it up, but maybe you have some equity, again, that bridge loan that we offer that allows sellers to pull the equity out of their current house, go buy a new house, but then also once they close on the new house, they're able to pull out up to $35,000 for home improvements on the old house to get it fixed up and ready to list. And that way you can move out of the house that you're in right now, move into your new house, kind of move on with your life, so to speak, then fix up the old house, get it dialed in, staged properly, and then really get it on the market to get, hopefully multiple offers and probably end up getting a higher price and selling a lot faster as well.
100%. And if you work with me and the home is vacant, I will take care of getting it cleaned for you. I will take care of getting it staged, the photography, videography, mapping, all of that good stuff. So we can make sure that your home is exposed in the best light as it can be. And then our price will be very strategically made. So I'm super excited. I feel like the spring market has already started. Like, I am seeing more homes come out. I'm seeing more buyers come out. We've had multiple clients actually put in offers. We're about to get one of our clients' offers accepted today because of you being so awesome and my negotiation skills, you following up with the client, making sure that you're telling them that our client's strong. It's just making sure that you're working with the right team
Yeah,
when you're
huge.
buying a home. And look up their numbers, right? Look up their ratings. It's good thing to do. Just do your due diligence too, because we're here to empower you and also represent you in the best light ever. What else do you think is going on, or what else are you seeing in this market right now?
Another thing that's come up that's becoming a little more popular as well is bank statement loans. Those are mostly for like self-employed. So if you're self-employed, you go to your bank, you go to a lender and they, you get declined for a loan because you don't show enough income on your tax returns. And that's the beauty of being self-employed. I try to write off everything I can, obviously. But when you start writing everything off, all of a sudden it shows on paper that you don't make a lot of money. And now you're trying to buy a house and you need a lot of money to buy a house. So it's like kind of that double-edged sword where you want to write off as much as you can, but you also don't, you want to qualify for a house. So the bank statement loan is a good alternative. It's 10% down, which is a little bit, steeper than the first time home buyer programs with like 3.5, 3 and 5. But if you can come up with 10% down, we can use your bank statements. We add up all the deposits, like the deposits going into your account, and then we use an expense factor, and then we can net out your income based on that. And we had a big win on that it was about 3 months ago. We had a guy that was a contractor, and he wanted to get pre-approved, got turned down by his bank, got sent to us. We started working on it. We couldn't do it on his tax returns either. But then we looked at bank statements on him, and he showed a ton of cash flow through his bank statements. So we were able to get him pre-approved for, drum roll, $1.6 million. And he ended up going into contract like a week later for 1.3. Nice. So it's one of those win situations where you think all's lost, you can't buy a house, and you kind of get frustrated or defeated. And this guy was able to turn around and buy the house of his dreams and move in, and he was super excited about it. So it was a win for them. And they got the house of their dreams. So it was a good opportunity. So again, for people that are self-employed out there, not all is lost. There are some good opportunities. You just got to work with the right lender. and the right realtor for that matter, to make sure you're getting all the options presented to you, because there are some great programs. They're getting more and more aggressive out there. They still require 10% down because, again, 2008 is still lingering out there. They want some skin in the game.
Yeah.
But when you're looking at someone's cash flow through their bank statements, that's a true indication of what it is. You take the
Right.
tax write-offs and all that stuff out of it. I mean, yeah, you're not going to show a lot of income, but in truth, I know so many people that make a ton of money, live a great life, but on paper, they look like they're broke, and
Poor.
it's just the advantage of being self-employed.
Yeah.
So I don't think
Yeah.
they're risky loans. They're just looking at an alternative way to calculate income.
Yeah.
The rate's a little bit higher just due to the risk. It's not a conventional loan. It's not Fannie Mae, Freddie Mac, or FHA or anything, which is, again, why we need 10% down. But there's also no mortgage insurance. So it's not actually such a bad loan because you do get a decent rate with only 10% down. So another great opportunity out there as well.
Ooh, I love it. I love it. Cool. So it's going to be an amazing weekend then. I think this is perfect segue to, we're going to be hosting a workshop, an investor workshop. So
Yeah.
we're going to probably be reaching out, pumping things out. We don't have a date. We don't have a time. We don't have a place, but we're figuring it out.
Yes.
Jeff and I are going to be teaming up together with some local property managers, so both long-term and short-term, so we can help you be an investor. Maybe you want to go straight into investing as a first-time home buyer. Maybe you've done the primary and now you're thinking you want to do landlord. Let's talk about all your options. And then if you want to talk to us before the workshop, we're happy to do a one-on-one consultation with you anytime. So super excited. The market's getting hot. Get prepared. Even if it's a year out, talk to me and Jeff. Let's get you on a strategy. The person that we're putting an offer in, we're probably going to get accepted. We connected last June. It's never too early to have the conversation. In fact, it's better to be early so then we can make a plan for you. So when the perfect house comes along, we can take action right away. So any parting words?
No, I think you said it really well. I mean, I agree. The market's heating up. I think now is a good time to strike before, while the iron's hot. I think as spring moves in, I think the spring market has started as well, but it's still not a lot of inventory. And, there's tire kickers out there a little bit on the buyer side. So I think there is an opportunity to still get in and get a good price. I think once the market really starts to take off in, March, April, May, that it's going to be a lot more difficult. I think you're going to see more and more multiple offers. I think we'll see more inventory, which will create more buyers jumping into the market that are, oh my God, look at all these houses for sale. And now every house is going to have 10 offers on it instead of 1 or 2 or 3. So I think it is time to get the process started. Even if you're thinking 6 months from now or 12 months from now, like Celine was saying, is get out there, get pre-approved, get a letter in hand, and maybe the right house pops up. Maybe it doesn't matter. At least you're ready. You know where you stand so that when the time comes and you're ready to jump in, that you can jump in immediately and, make an offer on a great place. And I think you're right. You need a great team in this market. You need to strategize. You need to have communication. And I'm excited. I think this is going to be the year that things take off, and it's going to continue to go for, I think we might be on a 3 to 5 year run, going down the road. So you want to get in now. Waiting is only going to cost you more.
It really will. Get in what you can afford right now, right?
Yeah.
Right now. So awesome. Thanks so much, Jeff. Always appreciate chatting with you. And let's help some more people build wealth with real estate.
Sounds great.
Bye.
Great day.